Looking to buy a home with conventional financing? We're busting that 20% down myth on this week's Tuesday's Tips. All right, well, thank you for being on again, Suzanne. Today we're going to talk about conventional financing. What exactly does that mean? I know traditionally a lot of us think that, well, if I go conventional, I need 20% down. So is that true? What else can you tell us about it? And go.
Yeah, thanks, Jeremy. Yeah, it's one of the big myths is that with conventional financing that you need to have 20% down. Not so. Buyers, if you have at least a 620 minimum credit score and the online system says yes, you've got the opportunity to do a 3% down payment. So you can get into a house for as little as a 3% down payment. Now, I do have to say, if you do have a 620 score, sometimes we might be talking about maybe the next product that you and I talk about, which would be an FHA mortgage with 3.5% down. But for a conventional mortgage, I just want to break that myth. It does not need to be 20% down. You got as little as 3% or even a 5% down payment for single families and for condos.
All right. So if we don't put 20% down, do we have PMI? How does that work?
Yeah. So PMI is what stands for private mortgage insurance. So if you're not putting down 20%, statistically, lenders feel like, hey, you've got a higher chance of defaulting. So what PMI does, it's an insurance that protects lenders where if you default, so let's say that you owe $300,000 and the house sells at auction for $220,000, that $80,000 deficit is paid by the private mortgage insurance company. There's three ways, Jeremy, to get rid of it. One way is you hit 78% of your original value, or I have a client that recently did this. He noticed, hey, a lot of houses like mine are selling for more. He's only been in the house 6 months. He reached out to customer service. They sent him a packet on what was needed to be done. He had to pay for an appraisal and his PMI was removed. Or if rates drop and it makes sense, you refinance to get rid of PMI. So it's not lifetime PMI. It does not last the lifetime of the loan.
You just took away all my questions. That was awesome. Well done. I was about to ask you, so is it lifetime PMI? It was like you're in my head and you're just rattling them off. Well done, Suzanne. Thank you. That's awesome. I have to tell you, this is a great product. The 3% didn't exist when I purchased the home that we live in now, but the 5% did. And I have to tell you what a great product it was. No lifetime PMI, so we've long since, gotten rid of our PMI. And man, I like it a lot. We have very high credit scores, for what that's worth as well. So we got the lowest possible market rate at the time. But even like you said, even with some lower credit scores, you could still qualify for this product as well. So it's pretty awesome. Yeah, that's why we need a lender like yourself where we can go. Someone could call you and be like, you could look through the whole picture and be like, all right, here are your options. It may make sense to go A, B, or C type of financing, or consider even two of the type. So, yep, that's pretty cool.
Yeah, I think I'm getting used to your cadence and your groove because I was starting to see the thought bubbles, and I was good. No firing off of questions. I answered them all. I like it.
Yeah, that was pretty awesome. You stumped me. All right. Great. The end of the video got cut off a little bit there. One of the other really nice things about conventional mortgages is, as compared to an FHA mortgage, is a conventional mortgage is not going to be looking for, oh, you need to put an extra railing here, or there's chip and peeling paint, or the roof's a little bit older. Anything, immediate safety hazard, it will come up on a conventional, but those are, from my experience, are very rare. So that's why a 3% down or 5% down conventional mortgage product looks much more appealing to a potential seller. I can tell you from recent experience, we were looking specifically for conventional buyers for a particular home, and we communicated that to everyone. And that's the way we went on that particular deal. And all the offers we got were conventional because we communicated that ahead of time, but we didn't want to deal with missing handrails or some chip and peeling paint on the exterior of the building. We just wanted straight conventional offers. So it's an amazing product. I hope you consider it. And Till next time, my name's Jeremy Bailey. I'm your Flying Realtor. Remember to keep your wings level, and I gotta fly.